Most financial firms don't have an SEO problem. They have a revenue leak. When SEO for financial services is done wrong, you don't just lose traffic. You lose high-value clients who were actively searching for solutions and never found you. And the numbers behind this are brutal. A huge majority of financial service prospects research providers online before ever making contact. And yet, nearly 3/4 of financial firms lose high-value clients simply because prospects can't find them during that research phase. When the average financial service client can be worth anywhere from $15,000 to well over $100,000 in lifetime value, missing just a handful of qualified prospects every month quietly turns into hundreds of thousands in lost revenue each year. That's what failing SEO actually costs. I've spent more than a decade analyzing why SEO for financial services underperforms, even for well-funded firms. I'm a finance specialist myself, and in fact, I have a passion for investment, and a large chunk of my clients are in this industry. And the pattern is always the same. Businesses chase rankings, while real buyers are evaluating trust, compliance, and credibility long before they ever click contact. By the end of this video, you'll understand why SEO for financial services keeps failing, what Google actually rewards in regulated industries, and how firms that fix this stop chasing leads and start attracting qualified clients. Why financial SEO is not normal SEO. Here's the first mistake. Most SEO strategies are built for short decision cycles. Financial services buyers don't work that way. Financial decisions involve retirement, investments, tax exposure, insurance risk, or business financing. These are not impulse decisions. They are life-altering ones. That's why financial prospects research for months, not minutes. They compare credentials. They check regulatory status. They look for fiduciary language. They want proof of specialization. And yet, most SEO for financial services is still structured like a general business website. On paper, it looks fine. Keywords are targeted, blogs are published, pages are indexed, but the leads never come as expected. Because SEO for financial services isn't about visibility first. It's about trust. Mistake number 1. Targeting the wrong keywords. One of the biggest failures I see is keyword selection. Financial buyers don't search generically. They search specifically. They don't type financial advice. They search for things like retirement portfolio management, 401k rollover advisor, fee-only fiduciary financial planner, SEC registered investment advisor, estate tax planning strategies. These are service-specific, compliance-driven keywords, and they are exactly what most campaigns ignore because the search volume is small most of the time. But low volume doesn't mean low value. One qualified search for fiduciary financial advisor near me can be worth more than thousands of visits from broad informational terms. In financial SEO, high intent always, but always beats high traffic. If your SEO report brags about traffic, but your calendar is empty, congratulations, you've optimized for spectators. And this is where I want to ground this in a real example, because this isn't theory. Last year, I worked with a SEC registered investment advisor, serving high net worth individuals and business owners. On paper, their SEO looked fine: clean website, consistent blog posts, an agency already doing great SEO. But growth had stalled. Traffic was inconsistent. Consultation requests were flat, and revenue wasn't moving in proportion to the effort. When we audited the site, the issue wasn't technical SEO. It was misalignment with how financial prospects actually search and evaluate trust. They were targeting broad financial keywords, boring compliance and fiduciary credentials, and explaining what they did without reducing perceived risk. So we shifted the strategy. We optimized around high intent, compliance driven searches like fiduciary financial advisor, SEC registered investment advisor. We rebuilt service pages to lead with credibility, methodology, and clarity, not sales copy. Within a year, organic traffic increased by 31.7%, and revenue increased also by 45.8%. And the most important part, the leads didn't just increase, they improved. Prospects arrived pre-educated, already trusting the firm before the first conversation. That's what happens when SEO for financial services is built for trust instead of traffic. Mistake number 2: ignoring local and compliance signals. Financial SEO also fails because firms underestimate how local and regulatory search behavior really is. Financial prospects are willing to travel, but will not travel across the country. Thus, they will still search geographically. Financial planner Los Angeles, wealth management to near me, investment advisor in X neighborhood. At the same time, compliance keywords play a massive role in trust. Fiduciary, SEC registered, fee only, FINRA compliant. These terms don't just help rankings, they help Google understand that you are legitimate. When those signals are missing or buried, Google hesitates. And when Google hesitates, impressions drop, even if your site technically ranks. This is why SEO for financial services is compliance-aware SEO, not just keyword optimization. And this is why content and structure matter so much in financial SEO, because rankings don't convert, confidence does. Mistake number 3: thin content that doesn't educate. Another consistent failure: content that explains what you do but not how or why. Financial prospects don't want surface level explanation, they want clarity. That's why effective financial SEO content includes detailed service methodologies, clear explanations of financial processes, transparency around fees and approach, credentials displayed prominently, real client outcomes and scenarios. Generic blog posts don't do this. Neither do one-page service descriptions. Educational authority matters because financial prospects are self-qualifying long before they reach out. If your content doesn't help them understand their situation, Google won't position you as the best answer. If your content sounds like it was written to check the SEO box, don't worry. Google checks that box too. then moves on. Mistake number 4. Treating SEO like a campaign instead of an asset. Most firms treat SEO as something you do. The firms that win treat SEO as something they build. They create dedicated landing pages for each financial service, educational blogs tied to real client questions, content clusters around retirement, tax planning, investment, and life events pages that compound authority over time. That's why older, well-structured financial pages often outperform paid ads. SEO done right keeps attracting qualified prospects long after ad spend stops. That's the difference between chasing traffic and building equity. If you are realizing that your website looks fine but isn't attracting the right type of financial leads, this is exactly the gap I help firms close. If you want a clear assessment of how your site performs from a trust, compliance, and high-intent SEO perspective, you can book a consultation with me. Check the link in the description. And if you'd rather start on your own, I've created a complete SEO audit checklist. You can download it using the link below and see where your site stands before making any change. Now, if you are thinking, this explains why SEO for financial services keeps failing, but how do I know if this is happening on my site? That's exactly what my next video covers. In Your Website Looks Fine, this complete SEO audit reveals why Google disagrees. I'll show you how to uncover the hidden issues that quietly limit authority and rankings, even when everything looks correct on the surface. What's that next? Because understanding why SEO fails is important, but identifying where it's failing on your site is what actually drives change.